Welcome to our July newsletter and the start of the new financial year. With winter in full swing, it's a great time to rug up by the fire, take stock of the year that was and make plans for the future. It's been a tough first half of the year, with the MSCI All Country World Index down by 21.7%. Markets have faced a laundry list of concerns. These include new COVID-19 lockdowns and an economic slowdown in China, the Russia-Ukraine war, surging inflation and central bank tightening. These issues are at least well understood now by the markets. At the beginning of the year though, it was unclear how far inflation would surge, how aggressively central banks would respond. There was little expectation that Russia would actually launch a full-scale invasion of Ukraine. The war has now happened, core inflation looks to be peaking in the US and the markets are pricing relatively aggressive tightening paths for most central banks. June was a big month in an eventful year for the local and global economy, with inflation and interest rates continuing to dominate. The US Federal Reserve lifted official rates by 0.75% to a target range of 1.5 to 1.75% to combat that surging inflation of 8.6% in the year to May, stoking fears of a US recession. Australia faces similar but less acute challenges, with inflation sitting at 5.1%. The Reserve Bank lifted the cash rate by 0.5% to 0.85% in June, and Governor Philip Lowe hinted at more to come in July. The Australian economy is still growing relatively strongly at an annual rate of 3.3%. Retail trade rose 10.4% in the year on to May on the back of low unemployment and high household savings. Household wealth actually rose to a record high of $574,807 in the year to March, but since then there's been a global sell-off in shares, a slowdown in the Australian housing market, and the cost of living pressures are mounting. The ANZ Roy Morgan Consumer Confidence remains weak at 84.7 points. Just to let you know, 100 is neutral. Australia's national average petrol price rose to 211.9 cents a litre in June, the second highest on record, on the back of a surge in global oil prices. Brent crude rose almost 45% over the past year as the war in Ukraine disrupts supply. Despite a late bounce in shares, the ASX 200 fell 9.6% in the year to June, while US shares were down roughly around about more than 12%. The Aussie dollar lost ground over the financial year to be below US 69 cents. The market pullback has without question affected equity markets, but as we kick off the new tax year, this represents a rare opportunity to take advantage of these capital scarred conditions by buying into high quality, well-led and profitable companies at lower valuations. The CBA has lifted the savings rate on its NetBank Saver accounts, with ANZ Bank lifting rates on its Progress Saver and online saving accounts by 25 basis points. The bank also said today, though, it would increase its fixed home loan rates by 1.4%. Drew O'Malley, CEO of Collins Food Group, states, "Consumer confidence has been down for about 6 or 7 straight months. People are going to be tight right now as mortgage and petrol prices take a bigger cut." So you're going to see a lot more of that, and you do see trade down from other food categories into quick service restaurants. Private sector credit for May was up 0.8% ahead of expectations of 0.6. Borrowing and spending are positively correlated. Businesses tend to seek credit when they are confident in their future financial positions. There are 480,000 job vacancies in May 2022. 58,000 more than in February 2022, and more than double the vacancies of February 2020. National job vacancies, 3 months to May, were up 13.8% to another record high. As an example from the Sydney Airport, Jeff Colbert, the root cause of these challenges, delays at airports, is that every business at the airport is rebuilding its workforce and doing it in the tightest job market in nearly half a century. The resources industry data group benchmark Minerals Intelligence says battery-grade lithium carbonate prices in China last traded at around US $69,875. This is up about 400% in the past year and encouraging suppliers to lift production. To Asian markets, China's June official services, and that's non-manufacturing PMI, has rebounded to 54.7 versus the 47.8 in the prior month. The jump comes after Shanghai came out of strict lockdowns in June. President Xi Jinping will arrive in Hong Kong for its 21st anniversary of Chinese rule. First trip outside of China for nearly 900 days. I actually thought Hong Kong was now part of China, but I suppose not mainland China. Chinese stocks are set for the largest monthly rise since 2020. With plenty happening, please share this amongst your friends to keep them informed, and I look forward to seeing you all again next month.